Hey everybody. All right, in this video, we're gonna explain to you very briefly about what sector rotation is. Okay, so the stock market in general goes up in leaps and bounds. It is not a straight curve up. So you need to understand something about sector rotation. So if you think about it, there's a bunch of money in the stock market. Okay, and there are a lot of fund managers in the world who manage this money, and then the money they basically choose which companies they will buy, and that's why you can see, for example, in an Amazon, that's why you can see a company go from a 1.3 trillion market cap all the way to a $2 billion market cap. So that's a delta of about $800 billion, right? So if there's $800 billion changing hands in some way, it means money is moving around, and money just doesn't move. 800 billion worth of money doesn't move around for fun. It moves around because there's sector rotation. Okay, so obviously AI has a boom and stuff, and so a ton more people are buying into the stock, for example. But this money, this 800 billion, came from somewhere. All right, and that's what sector rotation is about. Okay, so you need to understand that there's generally two types of sector rotations. So there's rotating liquidity or like money flows into growth companies, and then this is considered a tech or innovation like growth, a growth rotation, right? So companies previously, for example, if people bought a lot of Nike stock, right, and then they wanted to start buying into growth, then they start buying technology, they start buying innovation, stuff like that. Then they will move their money from the other stocks into buying into growth or tech stocks, for example. So that's called sector rotation into growth. The second one will be recessionary, right? So if there are fears about a recession, if there's, for example, generally a higher interest rate, um, and then people are selling away their tech stocks, for example, then they are buying more recession-proof businesses. Okay, they are buying more safe businesses in a sense that they have confidence in. All right. So your job is, if you want to play the sector rotation game, is basically you're trying to get into stocks before they start ramping up, right? So before Amazon made this move from 1.2 trillion to 2 trillion, you want to get in here, right? You want to get in here. You want to get in at the bottom, and then you want to buy. You want to sell at the top, or you want to hold it such that you're making the difference. Okay, so you want to get into stocks before they actually rocket up. That's the first thing. All right. And the second thing is you always want to look for opportunities where people are not looking at. Okay. And that's generally where you will make the most money. So that is why you should always look to buy when stocks are down, especially companies that you like. Okay. If you have a very, very strong company and if you buy on a green day or if you buy when the stock is rising, it's totally fine. If you know and have confidence in the company. But generally, you will make the most money where people are generally not looking at, right? So for example, Nike recently, Nike had a very bad fall, had about a 20% dip or so. Let's see whether you can see the price. Yeah, there we go. So you can see like Nike from its all-time highs, um, is really dipping, right? It's going from a 120 all the way down to a 73, which is almost a what 50%, almost a 50% drop right here, right? So that's a very significant dip from the market, from the all-time high. So it just means that if you believe a company like Nike is available or it's a good company, and you think it's gonna grow, for example, then maybe you should buy it. You should probably buy it, right? If you think so, right? So you want to look for opportunities where people are not looking at. So everybody right now thinks Nike sucks. Everybody thinks that Nike is not gonna be a good company and stuff, and that's why they're selling. And so that's why you see this sell pressure coming from the 120 high all the way down to the 73. Okay, so but if you think that Nike is a great company, then if you buy here, for example, and it really goes up all the way back to the all-time high, then you made a ton of money because you're looking into opportunities that other people are not looking at, right? So that's the second thing that you need to understand. All right. Okay, let's go back to sector rotation. So you can see here, Nike, for example, is a consumer cyclical company, right? Amazon is consumer cyclical because a lot of the e-commerce business is predicated on that, but they're more about tech. Um, you can see ServiceNow. This is a SaaS company. This is a technology company. Google communication services, but also technology in a sense, and then Apple technology as well. All right. If I open a random United Health Group, this should say healthcare as well. Okay, so you can see the sector is healthcare. I believe this stock right here, they own a bunch of hospitals and stuff. Okay, so here's a comprehensive list of the stock market sectors that you need to understand or like If you're interested, like here's just a list. Okay, just to educate you. There's energy, for example. So for example, ExxonMobil, people who sell oil, stuff like that, right? Is energy, right? People maybe they open solar wind farms. That's energy. Okay, materials, construction, containers, packaging, paper and forest. If you have a deforestation company, it's probably materials, right? And then there's industrials. So aerospace is like Boeing, building products, construction, machinery, professional services, transportation, right? Like your buses and stuff like that. All right. Then there's consumer discretionary. So automobiles, leisure products, hotels, right? So discretionary, consumer discretionary means that it's selling direct selling generally to the consumer. It's not selling to the business. And discretionary means that people are only going to spend on these things when they really have money or like when they want to. It's not a need. It's not a consumer need. It's a consumer want, right? So I'm not going to buy a $4,000 handbag if I don't need it. It's only when I want it, right? So it's people generally with money, right? So you can see hotels, leisure. In a bad economy, for example, people are going to cut down on leisure. People are going to cut down on luxury goods. So keep in mind, consumer discretionary. Consumer staples is the opposite of that. Consumer staples is basically like your supermarket chains, your food, your household products, right? In any economy, for example, you're still going to have to buy food. You're still going to eat. All right. In any economy, you're still going to um, buy your lipstick or whatever it is, right? Or you're still going to drink beer, right? Yeah. So these are your consumer staples. And then there's healthcare once again, healthcare, your hospitals. I believe supplements is in this space as well. Biotechnology, pharmaceuticals, life science, research, stuff like that. Healthcare. All right, then you got the banks. So finance, you got consumer finance, you got your banks, your insurance, asset management, investment banking, Goldman Sachs, etc. Real estate, so real estate investment trust. If you buy a company that manages real estate, right? Even in a recession, for example, people are still gonna have to rent us. People still need a place to stay, right? So this is your real estate over here. All right, your IT is your technology, right? It's your Google, your Amazons, your Microsofts. So this is software, IT. Semiconductor is like a TSMC. So maybe I open TSMC for you since uh, Taiwan Semiconductor TSM. All right. So that's your semiconductors, communications equipment. If I'm not wrong, AT&T is a communications equipment company. If I'm not wrong. Right. And then communications here, you got your media, entertainment. I believe Paramount, Warner Brothers, Discovery, stuff like that. These are parts of communication services. And then utilities, electric utilities, water utilities, right? These are stuff that even in a recession, you're probably going to have to use electricity and water, right? And then real estate, as I mentioned before, okay, this is just a repeat, my bad. All right. So you just need to think about like when you want to buy stuff, like what type of economy are you in right now, and what type of like market sentiment is there. So is it everybody is bullish, everybody is bearish, everybody thinks that recession is coming. Whatever it is, you got to figure out like what the next trend is, right? What in the next 6 to 12 months, how do you think the economy is going to present itself? Okay, so you want to look at, for example, um, if you know that a recession is coming, uh, and then you feel like it, for example, then maybe you should buy stuff that is going to perform well in a recession because when it really hits, for example, then these stocks generally outperform the rest. Okay, so these types of stocks in recession, you think about it, money is not very readily available, liquidity is low, consumer spending is low, consumer confidence is low, right? So the stuff that performs well generally, or the stuff that the fund managers pour the money into because it's more stable or it's perceived to be more stable, right? Everyone is going to drink food. Everybody's going to buy household products, cleaning items, right? So a company like P&G, so Procter and Gamble, right? They sell a ton of cleaning products. They sell a lot of stuff for the house, the household. And no matter what economy, that you're still gonna have to buy this stuff, right? So yeah, household products, tobacco, right? Electric utilities, and then healthcare, right? In no matter what economy, if someone is sick, they need to go to the hospital, right? So this one, discount retailers, right? So when a recession hits, people are generally more price conscious, and then they will go to Walmart. They want more discounts, stuff like that. All right, telecommunications. You're not going to cut your internet. You're not going to cut your mobile services. Consumer defensive. So your packaged goods, beverages, alcohol, stuff like that. Okay. So obviously this is a more cost conscious environment where consumer confidence is down. All right. and then stocks that perform well during an economic boom. So when the stock market is doing good, uh, then these are the stuff that generally increases, right? So people spend more on luxury, people spend more on entertainment, travel, because they feel that the economy is doing well, so that they don't mind spending, right? They're not as tight on their budgets. Technology, generally in a economic boom, technology, because capital is cheaper or capital is more readily available to new startups, so more people are willing to invest in technology, right? So there's a general consensus that okay, everything within innovation is going to grow, right? People are going to buy more iPhones. Yeah. Okay. The banks, okay, they benefit because more people basically borrow more money because they want to start businesses and stuff like that. Yeah, and then increase market activity. If more companies want to go public, if more companies want to go to an IPO, then they're going to go to Goldman or JP Morgan and stuff like that. Okay, and then industrials, companies like Boeing, whatever, increase government private spending. This, yep. People are building more things. You can see over here. And then energy, people are higher energy consumption because they're just doing more in general. You need more energy requirements. You're building more, so that's real estate. And then once again, here is consumer cyclical or consumer discretionary, where it's high-end retailers and consumer brands spending, restaurants and dining and stuff like that. All right, so you can see, right, the market in general always goes up. In the long term, it always goes up. But in the short term, for example, over a couple of years, there are sometimes when there's a recessionary period, right? People are bearish, people are bullish, right? And the reason why I'm telling you this is because I experienced this briefly, for example, in my own portfolio, where, for example, in 2023 over here, you can't really see the dip, but like you can see Amazon. I was holding a lot of Amazon at that time. So it was like, it went all the way down. It went all the way down to a 1.2 trillion market cap. And then now, because of the AI boom, and then everybody's pouring money into tech, for example, you can see the entire market cap of the business went from 1.2 trillion all the way to a 2 trillion market cap, right? So it basically increased massively. You can see the stock price is just all the way up, right? It's going from a 121 to a 200, basically, right? So in the same way, like this is how you ride on trends, right? The best point the best point to buy is obviously here, right? When everybody is very, very bullish about it, when everybody is not bullish about it, everybody thinks it's going to go down even further. People don't really care about the stock. It's when the stock price is depressed, right? You can see it's depressed here. So when it's depressed, it generally means it's cheaper than normal, right? And if you believe in the company, if the company has good fundamentals, then yeah, it will skyrocket above. All right. So that's pretty much it for this video. Thank you so much.